All right, boys and girls, today was a bloodbath for semiconductors. AMD is down 10%. We have SMCI down 6%. NVIDIA is down 6.6%. And a lot of people are asking if I'm buying this dip. And today I actually did end up buying the dip when it came to AMD. And I'm going to explain why I opened this position versus any of the other semiconductor stocks. And we're going to go over all of that in this video. Now, the contracts we opened were September 20th, $165 calls. You can see that this is a $71,000 position, and at this point, I have 50 of these options open. You can see that we entered this morning at 10:10 a.m. And the reason that we were deciding to go into this position is that if we zoom first all the way out to the weekly, I like to get on the longer term what the big picture is. You're going to see that we are still holding this market bias. And more importantly, this market bias still expanding. And if we were to buy every time price pulls back into this level and sell at a higher high, we have a very strong structure and a really good return that we could have been pulling for the past couple of months. Now, with that in mind, there is a chance that we do reject here and that this support level is broken and that we come back into this $100 level. I think that there's a pretty low chance, but we have to understand that if this level of 140 to 150 is given out, there's no way that we're going to hold. We will definitely pull back down into that $100 level. But that means that we have a really good risk versus reward here. If we look at what's happening on the weekly chart, you're going to see that before this week, the BX trender was showing higher highs, which is a sign of strength. It means that there's volume and accumulation of shares happening at this level. That there triggers the market bias to turn bright green, which we can see here. And in most cases, when price pulls into this, we bounce our way right back up. If you want to learn all about this indicator and how I trade it, you can go check out our free courses. This one is the market bias, going over how we made $600,000 in the first 6 months of this year using only that indicator. Something else to notice if we zoom in now on the daily chart is that price is pulling into that market bias and is now actually under it. Now, the reason that I didn't stop out of my calls today is that we have not made a lower low. Last time we pulled underneath the market bias and we have ended up bouncing before. If we even run a weekly overlay on top of this, you can see now that both the daily market bias and the weekly market bias are holding support, and they are both bright green, which is showing that we should see a bounce here. Now, just because we should see a bounce here does not mean that it is going to bounce. I mean, if we actually just look at the 1 hour chart, we close at an absolute low of day. But what I'm going to be looking for over the next couple of weeks is price to bounce in this level, because it's been an area of liquidity before, bounce off this level to test 164, 168, and I think that earnings is going to be the catalyst, specifically guidance into the rest of the year, that will either bounce us back up to the 200s or pull us back down to about $144. And at that point, we would stop out. But since I'm taking an options position here, I am planning to, worst case, lose that entire position. So if I were to go and take this position with, let's say, a $10,000 account, it would be no bigger than 5% or $500 of my capital. But you have to remember as a trader is that this is all about scaling. There's no reason to over risk your account from the very beginning, because if you have a smaller account, it's going to be much harder to scale. You're gonna have to take on much more risk. But I feel that so many people are taking too big of position sizes that it puts way too much stress on them and they can't let their strategy actually play out. And so we'll see what happens within the next couple of days. If price is able to bounce within this liquidity zone, then I think we can easily come back up to 180, 184. And you can see on the weekly that everything is still looking bullish and holding these levels. So until that is no longer the case, we're going to continue to be in this. If you want to learn my two-step swing trading system that requires only 30 minutes a day, going into market close, analyzing the daily and weekly candles as we've done here, then go ahead and check out our private academy. The link is going to be in the description. Over there, I teach you my swing trading strategy that is meant primarily for people who have full-time jobs and can't be sitting there in front of the computer all day. I do focus on day trading over there with those people who do this full-time. What we really focus on is helping people who have full-time jobs make more money in the market by leveraging their skill in the best way possible, which what I believe is this simple two-step system. Thank you guys for all the support. I hope you had a great day, and I'll see you next time.